wanted to talk a little bit about home equity loans. Equity in a property is where, and let's take your own home as an example, the home has a certain value and they've been going up nicely over recent years. You also have a certain amount of lending, usually the mortgage, against the home. The home equity is the difference between the value of the home and what you owe on it. It's quite possible at the moment that people can have hundreds of thousands of dollars of home equity, and this is particularly true if they have more than one property that have been going up in value. Now that equity, the difference between the value of the home and the debt on it, is a figure which is nice to know you've got, but how could you use it to make your situation better in future? You see, if you sold your house you would have that amount of cash, but otherwise it can't really seem to be used for much. And that's where a home equity loan comes in. You can lend against that equity in your home. Why would people do this? Well, it could be to pay off some other debts that are at higher interest rates, because a home equity loan will allow you to get the current interest rates on home loans. As well as that, people may want to refurbish or renovate, or maybe have to repair at a house to the tune of tens of thousands of dollars, and you can do that by taking one of these loans. Another option for buying investment properties is to use that equity in your own home to lend against as, if you like, a guarantee to the bank that the situation for lending is going to be fine. So that means that the equity in your home can replace the need to have a deposit, or it could even pay for an investment property in its entirety in terms of the lending. So you lend the money from the bank, it's covered by your equity, and you've got an investment property. That's how people do really well out of property, because then those values go up over time, they certainly do in this region, and then the equity builds and they can lend against that again to buy again. People think they have to have an actual deposit of cash or money available to buy an investment property. That's not true. There are requirements that you can check with your lender, but why not lend against the equity in your own home to work towards your future?